China was not always a global economic power. Just a few decades ago, it was a relatively poor country with a mostly agricultural economy. But over the last 40 years, everything changed. China opened its economy to global markets. It invested heavily in industry, and it became what many call the factory of the world. Today, China is the second largest economy on Earth, and in some ways, it is already competing directly with the United States. So what exactly is happening? And why is China now challenging the U.S. economy? Let's break it down simply. One of the biggest reasons is manufacturing. China produces more goods than any other country, from electronics and clothing to machines and consumer products. A large part of the world depends on Chinese factories. Even products designed in the United States or Europe are often made in China. This gave China a powerful position in global trade. But manufacturing is only part of the story. China is also investing heavily in technology. Companies like Huawei have become leaders in areas like 5G networks. Despite restrictions, China continues to develop its own chips and software. It is also rapidly advancing in artificial intelligence. This means China is no longer just producing goods. It is starting to compete in innovation. Another key factor is global trade. China is one of the largest trading partners for many countries. Its exports reach almost every region of the world. This creates economic influence because countries that depend on Chinese goods also become connected to its economy. Then there is infrastructure. Through projects like the Belt and Road Initiative, China is building roads, ports, railways, and energy networks across Asia, Africa, and beyond. This allows China to expand trade routes and strengthen long-term economic relationships. It is not just trade, it is influence through infrastructure. There is also the financial side. The US dollar still dominates global finance, but China is slowly increasing the use of its own currency, the yuan. Some countries now use it in trade and reserves. This is a long-term strategy to reduce dependence on the dollar. So how does China challenge the United States? Economically, China produces at massive scale and competes in global markets. Technologically, it is catching up in key industries. Geopolitically, it is building partnerships and expanding its reach. But the United States is not standing still. It is actively responding through tariffs, sanctions, and technology restrictions. The goal is to slow China's rise and protect its own economic leadership. The U.S. is also working with allies to shift supply chains to other countries. This reduces dependence on China, because at the center of this competition is one key issue: control. Control of technology, control of trade, and control of global influence. So what does this mean for the rest of the world? It creates uncertainty. Companies must rethink supply chains, markets react to political decisions, prices can change, investments can slow down. For ordinary people, this can mean higher costs or changes in available products. At the same time, competition can also drive innovation, new technologies, new industries, new opportunities. But the balance is fragile because this is not just economic competition. It is a long-term global rivalry. And like any rivalry, it will shape the future, not just for two countries, but for the entire world. If you want calm, clear explanations of global events, geopolitics, and the global economy, subscribe to Global Analysis Point. Thanks for watching, and see you in the next analysis.